Howdy, Jacob here. Today we're looking at FedEx Corporation in the air freight and logistics industry. It's pretty much the big two that you know are FedEx and UPS. Um, and revenue for logistics have been very good over the last 10 years, but FedEx for the last 2 years has actually had declining revenue growth, or actually negative revenue year-over-year growth. Their gross margin is up from 10 years ago, and same with operating margin. So it looks like they're still rocking that post-COVID margins, even with suspended growth. And they increased their dividend quite substantially over the last 10 years. But again, due to their margins being higher the last couple of years, it is inconsequential in relation to their earnings per share. We'll see what it is in relation to free cash flow coming up with an abysmal return on invested capital. So the money reinvested back in the business historically has not gotten a fantastic rate of return. And we see that majority of their costs, similar to other logistics companies, is going to be cost of goods sold. Not a huge surprise there. Their balance sheet shows $6.5 billion cash on hand with pretty much no short-term debt, but $20 billion long-term debt. So they do have quite a bit of net debt here. And so that 20 billion debt in relation to their free cash flow is going to be a pretty substantial amount. So free cash flow has not looked as pretty as their earnings. However, since after COVID, they have gotten back. They've definitely improved to spew out some positive free cash flow. And that's been coming about from cash from operations going up much more substantially than their capital expenditures. The use of cash the last couple of years since they've actually made some money is debt reduction, paying out a dividend, and share repurchases. So again, no surprises there. Not a whole lot of there, a little bit of reinvestment, but really that's going to be less than 5% of capital allocation. So majority of their money is just going to be going back to shareholders through share repurchases and through dividend. And with their return on invested capital historically that we've seen, not a big surprise there. So I think that's enough to get me to make some assumptions here. So again, post-COVID, there were some huge demands immediately in 2020, 2021, 2022, and then it has dampened down. If you do look, though, from 2020 to today, it's still over, inflation level, maybe a little bit more growth. And so with FedEx and UPS being the big two, I do think I'd be comfortable putting down 5% or so. Because again, you're going to get growth from inflation. And then I do think that a little bit of money can go towards reinvestment or acquisitions to get just above that. But when it does come to margins, although they kind of run, I know there are a lot of logistics companies out there. With them running the big two, I think that deserves a premium, but I also think that on the backside of that, margins are not as high, free cash flow is not as high as earnings, and return on invested capital is pretty poor. So for me, I would probably feel comfortable with a 14 on the P price to free cash flow. For another business that, they're essentially running a biopoly, good return on invested capital, even with 5% growth, I'd probably give them a good premium, but based on their margins, based on historical return on invested capital, I don't think that necessarily deserves it. And then I'm going to go more off their free cash flow, saying that maybe there'll be 3.5% and 3% margins. Share repurchases are pretty substantial for them. And so if we use 50% of capital allocation to share repurchases, let's say it's about 3 billion, so 1.5, that's going to be about 2%. Okay. And then the dividend, historically, they've increased that pretty substantially. There's a 2-year gap where they didn't do anything, but then outside of that, raised it quite a bit. So I'm just going to raise it with, 3% or so, nothing too crazy. So hopefully that capital allocation goes down a little bit over the next 7 years. And even with that, we're saying it needs to fall 56% to get to the price we're looking for here. So I do think, FedEx is a good company. Not everything's perfect about it. I don't think it's the perfect business, but as of right now, based on my initial analysis, it doesn't look at a price that makes a whole lot of sense to me. Hope you enjoy this video. Have a great day. Thank you.